Special council meeting, 2016 tax levy bylaw. Adoption of the agenda. Councillor Danaka.
Make a motion to adopt the agenda as presented.
Any additions? Councillor Danaka?
What?
Oh, you're voting?
Yeah, we're voting in favor.
We're voting in favor. Two.
There's some discussion there.
Point zero.
You can't add anything to a special meeting.
Finance. 2016 tax levy bylaw. You can take it away from here. Oh, we need a motion. Councillor Danaka.
The council received the 2016 tax levy bylaw for information.
All those in favor? Oh.
We discussed,
Sorry.
then we voted for information.
Yes, yes, right.
Just to let council know that we made this motion so that if at the end of the meeting, you guys decide on which option you're gonna go with the bylaw, then we can call a break and we can draft the right wording towards the motion, so.
Okay.
Getting used to.
Okay, as you requested, I did the options 1 and 2. And after discussion with Vern and Brian, we decided to also have option 3. And option 3 shows the difference of how you can increase the residential and decrease the non-residential. And we just did one as an example, but of course, if you guys want a higher percentage, you could make the tax rate for option 3 10 for residential and down to 11 for non-residential. It's totally up to you guys what percentage or portions you want. So those are the options, and I sent all this out so you could review it. Did you have any questions to start things off?
Is there a difference between taking monies from surplus versus reserve?
Yes and no. Reserves are allocated for a specific purpose. A surplus is if it hasn't been allocated and there's something at the end of the year. For example, right now, let's say, I'm just throwing numbers out here, it's not accurate. Let's say we budgeted $1 million of revenue in gas, and we're gonna be paying out $900,000 in expenses, so we're gonna have a surplus. It's already allocated to reserves for $100,000. The price of the gas actually goes higher or lower, that amount will change, and we could still have the $100,000 for the reserves and have $50,000 loss or $50,000 surplus on top of that 100. Reserves are designated for a specific purpose. They're already budgeted for usually.
So at the end of the year, when you do have a surplus, will you actually then allocate it to reserves?
Then council decides where they want to allocate the extra. So there can be additional reserves. Or shortage if it's
I guess I just have a question going back to what council approved already. Was that they waived 160,000. How was that waived, Brian? What's that? Oh.
if you check in all options 1, 2, 3, and the revised one at the back, all 4 of them on the middle of page 2, it shows the municipal non-residential under levy of 160,000. I put the number there. I put the assessment there, but instead of a mill rate, I put waived. So there is no number there.
Oh, okay, it's a different page.
So all versions have the same thing.
That was 160 that they waived.
Okay. And so how was that waived within our budget? Was that, and I think that sort of was, did that come
That has
out of-
nothing to do with this year's budget.
Okay, so it's coming as a deficit from last year?
Correct.
And it came out of our surplus, or did it come out of
It came out of
our-
your surplus from last year.
It didn't come out of reserve?
No.
Okay, that's, I guess, I think that's what Debbie was getting at. I was trying to figure that out.
Ah,
Okay, so that 160,000 is taken care of, it's done.
exactly.
And it's in our
New bylaw.
2015, it's been written off in that year as basically.
Yeah.
to elaborate on that?
Well, the explanation would be that last year, I don't know the numbers again, but let's say, because the auditors aren't finished yet, let's say your surplus last year would have been 200,000, and with that 160, it would have been 360,000.
Yeah.
So your surplus is just gonna be less for last year's books when they're
That's
finished
right.
off.
Yeah.
Yes.
Yeah, that's what I was. So walk me through this, because I know you explained it once, but maybe once more to say, what are we proposing?
Not a problem. Okay, to begin with, the top half of page 2 on all the options is your actual assessment levies. The bottom half of page 2 on all those is the under levies. The under levies are the ones that we have no choice pretty well, because it's the Recplex, the Housing Foundation, the education. So those ones, you can't change that second half. That's pretty well a given. The top half is what has to be decided by council, how they want to get the monies they need for their budget. The budget itself can be, sorry?
I just want to stop you there, just so I'm clear. Like this, the 160,000 that's written off, you're calling that an under levy?
It was an under levy.
Okay, now, and it could be just terminology, but I want to make sure I got it right. Now, that under levies in my mind only applies like when we're levying to seniors and to education?
No.
No.
Those are requisitions that we get from those,
Yeah,
and we do a levy against those requisitions for those same amounts. But the municipal one, the linear assessment that we had, the province gave us a wrong number. We did our bylaw last year. It was passed. People were sent out the amount they had to pay. After the fact, the province said, oops, we made a mistake of $12 million of assessment. That made a difference of $210,000 total that the non-residential people should have paid last year, but didn't.
okay, but we've written that off.
Not the 210, you've written off the 160. But the difference still has to be collected from them for the Recplex, for the seniors, and for the education. You can't get around that. That has to be coming from the ratepayers. You have no choice.
For the 2015.
For this year. It's an under levy from last year that was not collected, not appropriately charged out to them. At the end of the way it works with the requisitions from the Recplex, the Seniors Lodge, and the one from the school, they ask for a certain amount. We're basically the tax collector. We charge out that amount to them. At the end of the year, it's supposed to be a zero. You guys were $210,000 short last year because of the mistake that the province made. Now, the 160 of that 210 isn't an issue because it's a municipal portion. You guys have the authority to waive that. If you had been in a deficit situation, you wouldn't have been able to waive it. You would have had to collect it to make ends meet. But because you were in a surplus position, you were able to waive it last year. But the balance, you have no choice.
But the balance is 40,000, not 160,000, right?
210.
It's 210 was the total, minus 160, so it's 50,000. Correct.
So it's 50,000 that we have to collect now.
Yes.
So that 50,000 we're collecting for the government because they provided us incorrect linear assessment numbers.
Correct.
Yeah, I think we, yeah.
I don't have a choice in that matter. That was the province, and we have to deal with their mistakes whether we like it or not.
I think we have to deal with them, but I think we have to address this.
After the fact, if you council
After we
wishes to
pay
do
the
something.
bill, or
Yeah.
before we pay the
Oh,
bill?
after, definitely before, you have to pay the bill regardless, because you have to get it from the non-residential to pay these. These bills have actually already been paid. They were paid last year in 2015. We have to put the money back into our bank, because we already paid it in 2015. It had to be paid off by December 31st.
I think we should really consider how, what kind of position that the government's put us in,
Oh, I agree there.
and not just roll over.
I agree there, but that's a separate issue from the tax levy bylaw. That should, something that you guys can do next week, next month, whenever you guys want to. I agree personally that it should be addressed, but it's actually got nothing to do with the levy right now. The levy still has to go and get done.
The levy's dry, right?
The levy's flowing with red ink.
So this is what gets me, like, we owe 50,000, we were just explaining, but then in here, in option 1, this still leaves a shortfall of 92,460. That's,
okay, that's got nothing to do with the under levy. All the discussions to do with the rest of the stuff is to do with the top half of the page 2, where you guys are assigning the levy for this year for 2016.
You keep saying page 2, but page 2 is here, or is there a different page 2?
There's 1, 2, 3, 4, 5 page 2s.
yeah, each option's got a page 2. Yeah.
Option 1.
2 or 4.
Yeah.
Okay, page 2 and 4. Okay. Yeah. All right. Hey, I'm catching on.
No problem.
Good.
Councillor Gilroy.
I just have a quick question, and I heard the with regard to this, I have to go back to the government also not only making that mistake, but the government taking that money out of the social housing. How does that loss of that money last year and potentially this year affect our mill rate? If we can recapture it somehow, does it change?
In regards to the education portion of the housing that you're talking about, the government?
I'm thinking of the gifts in lieu of taxes.
Okay.
Or grants in lieu of taxes.
Okay, if you look at the notes that I put in there on your page 3 of your package, the notes for council, at the very top of the page, reminder, page 3 total of your whole package, okay? It says notes for council on the very top. Okay, right at the very top it says reminder, effective this year. Okay, what the province has done for the grants in lieu is that they have taken it upon themselves to no longer charge education tax on that. Now, we were never getting the education tax anyways ourselves. So what the province has done is they've taken that out of their equation when they do the equalized assessment across the province for all properties that pay education tax. So now it's spread over the province differently because all the linear is taken out. In our case, the amount that they're collecting for education tax for our residents has hardly changed at all. But it did not place any additional burden on us whatsoever. It's got nothing to do with us because it was the education tax, like I said, we're the tax collector. They give us the bill, we collect it from the residents and give it back to them. We don't get any of it. Our residents don't get any of it.
Vern?
Terry, I think what Councillor Gilroy is referring to is the $110,000 for social housing that we used to get in grants in lieu of taxes from the government. I think that's what you're referring to, right?
We'll still be getting that.
Nope. No, it's waived. It's gone.
We get the seniors portion, but not the social housing portion. Well, you moved the budget for me.
What you're saying, Brian, is that we've lost the money from the GILT, the grant in lieu of taxes, and now we're in debt for this $200,000 that it costs us there. That's $300,000 for our taxpayer, and just doing some rough number crunching, rough numbers for our 800 residents. That's over $300 per property that's getting, that we have to make up.
So this is something that happened?
So that $100,000 that you guys got for your housing buildings was something that was dropped last year?
Yeah.
Okay. Different municipalities had different amounts. I wasn't aware you guys were getting that much, so.
Yeah, we have a lot of social housing here, but so it is a big thing, and like Debbie says, we're going to have to address that at another meeting, and we're going to need to send a letter and ask for some of this air back and make sure that they know, number one, somebody's got to tell them they made a mistake and push it up the line and maybe get something. I don't know if we will, but we got to try.
They knew they made the mistake because they sent us the second letter and told us what the assessment should have been.
Yeah.
From 14 to 2, so they know they made the mistake.
they know they made the mistake, but I don't know if they know the impact it made on our community. $12 million difference is very different for a community of 100,000 people versus a community of only 2,800. So the impact of our residents is very big. And as a separate issue, of course, I would love to write that letter.
Yes, we need to have that one written. But going back to this one, just so we can nail this down. So if I understand right, if I can, we've got this, it's $50,000, like we paid, or the companies paid more money than they should have last year.
No.
The opposite, they paid less than they should have.
Less money. So we paid but if the money was applied at, 12, yeah, okay, yeah, my mind's, you're right, they got 12 million, so their rates were much less, we didn't collect enough. So now we have to collect, it's 210,000, of
Correct.
which we're saying, okay, we're gonna not worry about 60,000, we want the other 50.
Correct. But like I was saying before, the under levy is a separate issue. It's something that most years you don't have that whole section on the bottom half of page 2. Most years you do not have that. It is not an issue. It's got nothing to do with the tax levy bylaw. This year is an anomaly because of the two big mistakes that the government made. But it is a separate issue from the rest of the tax levy bylaw.
But we don't, and this is where I'm having trouble. You're saying we have to collect all 210?
No.
Yeah, we only have to collect
Correct.
50,000.
Yes, because council has already decided to waive the 160.
Okay.
If you look at the bottom, where the under levies are all on any of the page 2s, you'll see that where it says waived, there used to be a mill rate there, okay? And the mill rate is taken out because it's written waived. And if you look at the subtotal, I did not add it in for the under levy. So you add the 33, the 37, and the 10. Those are all the mistakes that the province made type of thing, but there's no addition there for the under levy for, am I explaining it right? Yeah, I see a confused look.
I'm still not quite with it. Yeah. Okay.
But because there's zero in the where it says waived, it's 0, we will not be collecting that 160 from the non-residential.
But for the tax year of 2016, Brian, that is in there. What they should pay will be based on the 2 million assessment instead of the 12 million assessment for this year.
Absolutely.
Yeah.
Because we don't want to repeat.
Absolutely.
That's what option 2
Yeah.
is, and it's a repeat of the previous year's error.
And and it's unfortunate because the town is going to get labeled of not doing things right, but we need to put out some good press and a newsletter perhaps on exactly what's happened and what we are doing. And I think, like you sell this to them and say, look, this was a mistake. It cost 210,000. The town has absorbed the 160,000 of it, but we are going to have to, the rates are going to look like they're higher than they should have been,
But as you notice, if you look at the examples I gave for the 4 pages of examples for the large residential, the small commercial, the large commercial, and the 2 residentials.
yeah.
Okay, those are towards the front. You'll find that if you look at the 2014 year and the 2016 proposed yet one, the amounts are very similar. So if they're comparing just 1 year, yes, it'll look like there's a big jump. But if they look at the trend over the last 3 years, it's totally consistent.
Yeah.
And that's where you guys are gonna have to tell them, we'll look at 2014.
I'm just curious, when Herman was talking to us, he also talked to us about the mistake that was made, or the late bill by the school board.
Yes,
Should that be under the under levies?
it is.
Okay, because I don't see.
Yes, it is. There's 2 under
Oh, okay.
levies. The school board mistake is the 37,484.
Okay, 'cause I was looking for the fact you had said it was over 100 at one point, so like, still a little confused on it, but 37's good.
He may have said 100, combining all the errors of the different portions. I don't know, I wasn't here, but the education portion for the reassessment in September is only 37,484.
And that will put us back to.
Zero.
That's the amount that we overpaid is 30.
That we underpaid.
Oh, that we underpaid, paid out of our pocket, that we underpaid.
Correct.
Was 37, not 100.
You got it.
Okay.
And again, that was late because they didn't submit.
I don't know why. They have never, in the years that I've worked for municipal government, ever done that before. Normally it's in December, and they give you an approximate. They make a slight adjustment in March. So your check from January 1st and March 31st, the two of them together will average out to the correct amount. And then they ask for quarterly payments. So then you have two more payments in June and in September. And that's not an issue. This year when they did that, and it could partially be because of this grants in lieu, I don't know why. I have absolutely none. I'd have to ask the education department why they reassessed. But that affected the whole province. That one did not affect just High Prairie. That affected the whole province. A lot of municipalities are upset about that one. You guys just got a double whammy, that's all. But the social housing, again, was all the other many municipalities, and that was considered last year.
Except for the majority of municipalities don't have the amount of social housing.
That could
So
be.
the impact isn't as large as
That
we
could be,
felt.
yes.
So the mistake in September had nothing to do with the mistake of the assessment on that
No.
business? 'Cause
No,
you're talking
the
about-
assessment was linear,
Yeah.
and in this case, it happened to be Alberta Power and all their lines that were assessed for some strange reason, 12 million more than they should have been, and as soon as they saw their mistake, they put it back down to what it should have been. The other mistake came from a different department at the province. It came from the education department. And the education department is the one that does the equalized assessments and asks for their requisition. So it's two totally different departments of the province.
The reason I brought it up was, I'm sorry. The reason I brought that up was simply because you'd said, as a municipality, we could forgive 160,000 out of our surplus, but you said there was a portion of that was also school, et cetera, that we had
Correct.
to. And I was wondering if maybe there was some sort of connection between the two?
No.
But, no.
No.
I was hoping. I was hoping.
It never hurts to ask. So what we have to do now is for council needs to make a decision as to this year's levy, forgetting the under levy part, this year's levy, how much you guys want to collect and how much you want to put into reserves. And that's why I did the original bylaw. And then I gave you now options 1, 2, 3, and of course, changing just the wave and the additional monies in your revised one at the last 2 pages. So then, depending what council decides what they want to do. And as I said a while ago, if you want to change option 3, you can put the residential mill rate as high as you like and bring the non-residential down accordingly, percentage-wise. That is totally up to you.
So in my mind, the way I see it working is, okay, we've written off that, we got to collect the extra 50. In my mind, you just divide that between our ratepayers to collect that, right? Both residential and non, or
No,
no, just with the non.
it just happened to be out of the non-residential portion.
But we can determine if we want to collect it from the residents.
No,
It
not the
has to
under
come-
levies,
it
not the
has
under
to
levies.
come from them.
Not the under levies,
Okay, so that has to come from
the non-residential,
non-residential.
yes.
Okay.
But this year's portion, this year's levy,
Yeah.
that is totally up to council how they want to make it fluctuate.
So why would, and then we want to, in my mind, go back to what our budget that we approved would say, whatever our rate was, and leave it at that, right? Like that's, correct the error now.
Yes.
Pay
In
the
future,
price.
in future, whoever your treasurer is, whether it's me or not, what I would recommend is that you work on your decision of how much you want to fluctuate your mill rate and your budget at the same time. What I used to do with other places is that I would give you scenarios, 4 scenarios usually, similar to this. Option 1, keeping a mill rate the same, keeping the dollar amount the same, et cetera. And there's usually 3 or 4 options to show you guys if you increase it by 2%, if you increase it by 5%. And then council can see how that affects the budget. Right there, like I got my laptop, I've got the spreadsheet on the overhead, and you guys can just click a button. You guys see the changes right now. You see what you want to do, and then you can make your budget right then and there, and then your tax levy bylaw is just a formality. But that's the way I do things.
For at least 2 of the options, number 2 and 3 that I was looking at, you're talking either significant hits later on with a severe deficit situation or a deficit situation that needs to be collected in future years. I'm not asking for anything concrete here, but you had mentioned at the meeting on the 26th that in other municipalities you'd had to really raise it a lot to cover it. And I'm wondering what kind of time frame roughly we look at so that we're not appeasing people now and mortgaging the farm later. I'm just curious about that.
That depends in part on the dollar amounts, because of course a significantly higher amount would impact the people more, or in shorter years. Like if you wanted to recoup it in 10 years, then it would be a higher amount if you go with option 2 than it would if you go with option 1 and 3. If, however, you want to just spread out that thing to 15 years instead, that could be done also. But the reason for most of these surpluses that you guys have been putting aside into reserves is because of the fact that you need to replace your infrastructure right now, and it's in getting to the point that it's almost critical. When you get to items that are 50, 60 years old, they need to be replaced. Where's the money going to come from? Can't count on the province anymore. Then the feds, they don't seem to be wanting to give out any monies, and they're starting to get the same question from everybody. So you have to start to be a little bit more self-sufficient, and the way to do that is to build up the reserves, and then when you have to replace it, you've got the money there. So yes, option 2 would put you very severe into your budget plan that you guys have done, a 10-year budget, and that would really be critically affected by the 220,000. The 2 options 1 and 3, it's 90,000. It's doable because it's split over 3 departments, 30,000 each. Approximately, it's doable. You'll still have to collect it in the next few years, but it's manageable.
It could be replaced if we had a surplus, for example.
Yes.
So it could be a non-issue if we had a surplus of, say, $90,000.
Correct.
If money rained from heaven, or how are we doing this?
Efficient operations.
Efficient operation. There we
If
go.
Michael was here, Michael would say it could happen.
Yes, you're right, but you can't count on that. I always like to think conservatively for the revenues. That way you're covered either way if something does come up. Like when I do my budgets, for example, I always put my revenues about 5% lower than what I'm thinking that's probably going to be, just 5% lower, and I put my expenses about 5% higher than what I think they're going to be. And that way, no matter what happens during the year, you have a little bit more snow, you have a little bit of an emergency, you're covered, and the balance at the end of the year is usually close to 0. That's the way I do it.
When we discussed this, I looked at, when we discussed it at the 26th meeting, I looked at the 3 big reserves that we were setting aside, and I'm comfortable with the 92,000. All it would take is a normal winter, and we would operate the gas system at probably that 90,000 extra, just on a normal winter than what it was last year. So I'm comfortable with recouping that 90,000 through more efficient operations if we can find them, plus counting on a little bit of a cold winter, because that's what's supposed to be coming in long-term forecasts for this winter. So Public Works would be comfortable with those 3.
And I would be also,
Because in worst case scenario, if it doesn't happen like he's hoping, we can still probably recoup it over the next year or 2. So I'm not too worried about the 90. But when you get to 220, I'm scared.
And the 90 is based on a increase in the non-residential tax rate.
increase to what it should have been.
But to the average person, it's still an increase.
Not if they compare it to 2014.
But if they compare it to 2015, I hear what you're saying, but we're gonna have to deal with the 2015 number. So again, the numbers, so just to sort of refresh everybody, because we, like, it's in amounts here, but not in mill rate,
Well,
differences.
to address the first thing, we have to educate the people to get them to look at the 2014. That's the biggest hurdle, is to get them to look at the 2014. Once they compare it to 2014 and what the 2015 should be, it'll pretty well be a non-issue almost, I figured, because it's not going to make that much of a difference from what it should have been. The second part of your question is the fact that the amount that for the expenditures, the amortization doesn't change. We did increase the amount for the MSI, so the balance that's to be generated from the residents, either you can offset the residential from the non-residential, vice versa, that's also up to you. If you don't want the non-residential to be impacted as hard.
I have to write something out if I can, because, you know, I have to apologize. Maybe missing the other meetings has put me behind. Or maybe I'm just brain dead. Or I'm brain dead, because I'm
probably really happy for that.
I'm having a tough time grabbing this, so if I can, if I put it on the board and see if I'm doing this, and then you can correct me, would that be all right? Would you guys accuse me with that? Okay, because I'm having a tough time.
Vern?
That's my. So
If council looks at last year's taxes of what we collected, we held the dollar line of what we're collecting in taxes and actually lowered it. So it's just that, it's that $12 million that has put us in the bind that we're in.
Well, okay, let me just see if I'm getting it. We have a budget that we approved for 2016. In 2015, we had to write off $160,000. That was surplus dollars, so it's not going into any of our accounts. Okay, any of our reserves. Okay, so that's done. It's over. It was a mistake. We're not going to recoup that 160. We still have to tax that extra 50 and under levies to the collected for the schools and for the seniors. I get that. Okay. But why? What are we talking? What are we looking at changing the budget that we approved already? Is that what we're saying? Okay.
We are looking to amend the budget based on the options that you go with to reduce the contributions to capital to meet whatever option you choose. But I think I know where you're going, Brian, is that this year's linear taxation for ATCO is down $12 million. It will be the actual amount, not what was taxed out last year.
I understand. So, okay, so in 2015, I'm just going to pull a number out of the hat for a company, the non-commercial or the commercial people. They might have paid, it was a great year, so they paid $1,000 in taxes. But in reality, that was really low because they were assessed at $12 million instead of the $2 million. Correct? So they should have been in this year, it should have been $3,000.
That's a big difference.
But it is a big difference when it's $12 million that they're assessed, right?
But your proportions are way off.
Okay.
I think that's what she meant.
But I'm just saying, it's just.
That's heart attack time.
So in 2016, we needed to collect that $3,000,
Correct.
right? We need to collect that.
Or the difference of the two.
And plus, they're gonna have to, plus, they have to collect the under levy.
Yes.
No, but the 3,000
I know,
will
the
include that,
3,000 is
because we're
everybody.
gonna be
because this was what they should have paid last year. And we're keeping this number, in our budget, we said we want this number and this number to be the same.
That's what it's supposed to be.
Then it won't be plus under levy.
Well, it will be plus the under levy, partial under levy, not the 160,000 part,
Plus the
but the other
50,000.
50,000.
Plus the 50,000 that we have to collect, we don't have. a
Correct.
choice.
Can we see what this will look like to the consumer?
That's what she's done.
I've given you 4 examples. 2 residentials and 2 commercials.
Oh, and
But I thought this under levy was only for commercial.
Yes.
But some of these examples are impacting the residential.
Only option 3.
that was only if we wanted to impact them.
If you wanted to lessen the impact on non-residential and increase the residential slightly.
Yeah. Otherwise, the residential isn't being affected at all.
Okay.
So it's the non-residential are the ones that are being affected all the way around, not the residential ones.
So,
So all
but,
the guys that are complaining to me about their tax bill being too high, we're gonna raise that.
Those are the ones.
Those are the ones? Alright.
well, but it's coming down
I know,
to,
but
yeah.
that's the nuts and bolts of it.
Well, we reduced it based on the fact that we had this increased assessment, and that we could reduce the non-residential. And the people that did complain, and we addressed this at a council meeting, when we had a few, members of the community that had commercial properties and commercial tax assessments come forward. At that council meeting, we sort of determined that, because some of them said, well, I should have built in the county because I would have paid less taxes. We determined that we were within a point or two of the county's mill rate, and that I think that our residential rates and the county's residential rates are quite different, but when we were looking at non-residential, we were very, very similar, and we're within the boundaries of town, offering pavement, water, sewer, things that you get in town versus building a commercial property out in the county. So I don't think it was really, I don't think the knowledge was clear until we started to address it, because there was some people that said, well, I could have built, behind this property line, but then they wouldn't have been able to tie into sewer or,
And all this is based on just one problem, right? The one company?
The linear assessment was based on one huge
Right.
mistake.
yeah, one
What-
company,
was it
the
one
Alberta
company?
government.
No, but one linear
My question
property.
then is, when I look at Brian's, for example, he said, they charged 1, should have had 3, which is different is 2, obviously, 2 plus whatever we're gonna do this one. But I'm just wondering why, in a sense, we have to share that mistake with every single business as opposed to,
Because you've got a pie that has to be split 5 ways. You were told you were able to split it 6 ways, so the share was smaller for each person to pay. Then it turns out that no, it should have only been the 5.
Okay, and this under levy part, just so I'm clear, this part has to come from commercial. But we could lower this one and increase the residential one. That's what we're here to decide? Is
That's
that-
up to council, yes.
that's option 3. That's option 3.
But option, the revised bylaw, the 4th one, the last 2 pages, that one does not change the budget at all. That one is also an option that you guys can have. You've waived the 160, but you still have to collect the under levy, but it doesn't affect the budget at all. And that one is, you won't be shortfall of 90,000. So again, that's your other option too, still.
That's where I'm getting lost here. We wrote off that 160,000, so where's the 90 come from? Where's the 90 from?
The 90 comes from the fact that you guys did not want to collect the same amount in your budget as what you had for this year's budget.
Okay, so we wanted to collect this 3,000, but who said that we don't want to collect that much?
You guys did, because you said that the budget says that you guys, okay, the original bylaw I did was according to your budget.
Okay.
You guys did not like,
In our original budget, we said we wanted this much from all of the businesses, right?
I did not look at the budget details. I looked at the dollar amount that you guys approved. And I based the tax levy bylaw on that amount.
But if I'm not, Brian, we did say that we wanted the budget the same as 2015.
But that was based on but wasn't that based on a $12 million assessment with a $10 million error? Last year's budget, right? So the taxes,
No, but the budget wasn't, but we said as a town, as a budget, is what we needed to run the town, we said was,
what we collected last year.
yeah. And then we're saying the same amount is needed for this year. Right? The money that the town needs to operate.
The amount that you guys had in your budget was not the same as last year? Just so you know, you guys might have told your treasurer that, but the amount that was in your budget was not?
So okay, now we're really confused. Vern, and then Councillor Gilroy.
The amount of taxes that is budgeted to be collected this year is $2,959,901. The amount that was actual, according to my little sheet here, was $2,995,354.61. So you're actually collecting less taxes this year than the actual of last year.
So it's very close to the taxpayer dollar, to the taxpayer.
Yes.
That's what I was the understanding. So it was about 2.9 million.
Councillor Gilroy?
Actually, part of this confusion probably arises from our last meeting, where the decision was made, first of all, to, in a sense, forgive or waive the $160,000, but a commitment was made by Councillor Long, and we agreed because we all voted for it, that he had said he'd made, the promises were made to lower, and so we challenged our acting treasurer to lower the mill rate and give us other options, and that's why we have it the way it is. Councillor Long and the rest of us felt very strongly that if at all possible, we wanted to either keep the line or lower it for the businesses, and that's what precipitated these other options. So it had, in a sense, that's where all this confusion comes in, because you're saying, so where'd the 90,000 in? Councillor Long suggested, well, maybe what if we get rid of 30-30-30 to get rid of the extra money that we were going to be short, so that we could then put something that was more palatable for the taxpayers or the ratepayers of our town.
What you guys are saying is we don't want to collect this much from them. We want to be closer to this amount than this amount.
Let's say 2,800 is what.
Having a hard time with your ratio there.
2,800.
No, for 2016, you're changing it to 2,800 instead of 3,000, is what was suggested in options 1 and 2.
But from what? Not from 1,000.
Well, I'm just.
From the 3,000.
It's hard to see that,
Okay, I picked numbers.
But Brian, are you saying that basically the amount of money that we operated the town with last year was what we collected in taxes?
Well, we're collecting 2.9, and we want to collect 2.9 again in taxes. So the taxpayers of High Prairie, both residential and non-residential, should be paying the same amount.
So why does that, yes. I don't understand why that
But-
means an increase.
But last year's taxes that we collected had an overwrite of $160,000.
So you collected $2,900,000 and that was over $100,000.
No, this is what we projected to collect, right? And then we had to give back the overpayment from ATCO.
We actually had to write a check out to ATCO or Alberta Power for $210,000.
So we actually collected about 2.7
7.
after we paid that back.
And now we need 2.9 because we really needed 2.9
9
last year, but we didn't get it.
Absolutely.
Thank you.
Okay, so what you're saying is that in this year, we only collected 2.7
Yeah.
in revenue,
Actually.
in
Yeah.
taxes.
But we should have collected 2.9.
Yeah.
But that 200,000 came all from these guys.
because of the overassessment of the 12 million.
Wasn't it, it was supposed to be 15 and you said that we charged 13? Was the mill rate?
See, that's where the problem happened at your last meeting. You guys wanted the mill rate to be lowered, and the mill rate is irrelevant, and that's what I have trouble explaining to people sometimes. It's just a percentage of the pie. You still have to collect the same amount. You still have to collect, it depends, if the assessment stayed the same, then your mill rate stays the same. But if the assessment changes, the mill rate changes accordingly to collect the same amount.
And that's why Councillor Long was suggesting that if we could save $100,000, we could lower the amount we needed, and then we could lower the mill rate to offset it. That was his suggestions.
Okay, so I understand now. Thank you for bearing with me.
We're very happy you understand, Brian.
Thank you. Sorry.
Arlen, you don't look like you understand.
One more time.
Look at option one.
The levy was dry.
There's the song again.
So don't take the Chevy there.
Councillor Courtley, do you have any questions?
Soaking it up.
Okay, so what if we leave, just so we continue on this, if we left for the commercial people, large commercial, if it's left in with the budget, with the way we thought it should be, they would be paying next year how much? I'm just looking for a large commercial, which is on that one page 4. They would have to pay 71,000.
Correct.
They paid last year 62. Oh, okay, and option 1 is just the status quo of going with that, right?
Yes.
And that's, they should be paying 70, they'll have to pay 71,000.
Or 70,000.
681.
Yep.
And that's collecting the the under levy.
Nope, that's got nothing to do with the under levy. This is just the portion that they should have paid.
Okay, so you'd have to add the under
Correct.
levy on that, on top of that.
Yes.
Okay.
Now, if you look at the option 3, that one is lower than what it was supposed to have been, because that's where it shows that the fluctuation between the residential and non-residential. If you guys want to increase the residential, you can lower the non-residential. That's totally up to the council. We don't have a choice when it comes to the levies from the province for the education, but for your municipal portion, you guys have total control over that.
What, that 50,000 that we have to collect for businesses, and the under levy part, how much is that per business, like with this large business pay of that? Just as a rough idea, do you know?
If you'll excuse me for 2 minutes, I'll go to my adding machine. I can tell you right away.
I'm just trying to see how much more is that to them this year?
Because all I have to do is add the under levy, multiply it by the assessment, and I can give you an answer. And if I had an adding machine here, I could give it to you right away. But if, excuse me for 1 minute, I'll just go and get it for you.
The school was different in the first column for large. It would charge 11, and she would charge 13. There's part of the assessment as well. So technically, if we look, I was just circling municipal, and it's like 6, roughly almost 6,000. It's was our share.
Yeah.
Of that.
I know I brought my budget short.
Okay, but that's, if we're charging them in 2016, they would go from 62,900, so say
Either
70,000,
70 or 71.
up to 71,000.
Or 70.
Well, let's just go with the status quo, per se.
And that 70 to 71 isn't making much of a difference in the commercial. Like, we're talking $1,400 over everybody, like over the whole assessment, right?
But
No, isn't that per assessment? Per
Assessment of $3 million.
No, I'm you're saying, I'm saying for the individual person, if you have a property worth,
On the owner, it's on the assessment.
the rate
This is one individual company.
Yeah, no, that's what I'm talking about. If it's one individual company, $1,400 is still $1,400. I mean, that's still something. You're also talking, when you add that to the take it. And they can, you know.
It's gonna hurt, but in my opinion, it's better to take the lumps once and get back on track and go. That's my opinion.
But should we seriously consider raising residential rates as well and sharing it amongst everybody?
My answer might change your mind. It's not as bad as I thought by a long shot. The increase of the under levy is 0.6925 mils for, if you add all the ones at the bottom of the page there, for non-residential. And that adds up for the large commercial, which is probably one of the largest ones you'll have in this town, makes a difference of $2,475.
And so for the smaller one?
Oh, I didn't.
Oh, okay.
I didn't do the calculation. I figured as soon as I saw how small the large one was, it was going to be minimal for the others.
So that's on the total
So for next year, this company, this large company would have to pay the 71,681 plus 2,000 for the 2,000 and some. So they would be paying 73, and they paid 63 last year.
For this year.
Yeah.
Okay, for next year, we'll be back down to the 71. Depending, of course, on everything being the same.
I'm still kind of confused why it's going to be back down.
Because you won't have the under levy next year.
The 2,000 they won't have to pay. But the 2,000 hasn't even been included in these calculations. The under levy part. This
Yeah, I
part-
know it's the under levy part, but I thought that that was the part that we were waiving in the 160.
The municipal portion, not the education portion.
The part of that 210,000 was supposed to be part for the town to run. We had to write that off. But this 50,000 goes to the schools and to the seniors. It still has to be paid to them.
Well, it's already been paid,
It just has to be collected.
Has to be put back into our bank account.
And the auditors want to see a zero balance in those accounts every year. All the auditors, our auditors, provincial auditors, everybody, because what you're collecting for those organizations should be exactly the same as what they requested, no more, no less.
Maybe we should have got the numbers the more accurately.
So the real question is like
We're saying, do we just keep it and say, okay, we made the mistake, and companies, you guys have gotta suck it up? And really, that's what we're saying to the few businesses in town, and that's gonna make them angry, there's no doubt about it.
I have a suggestion that might offset some of the flack you guys might be getting. For all the commercial tax notices we send out, we could include a letter.
Oh, absolutely. We have to say why this is changing, and we have to make it very clear. That's that marketing and promotion piece. Absolutely, and we should be putting it in the paper and in the.
It'll cost a little bit more in postage because I think our notices are set up so that they don't have an enclosure. So it would be set more postage, but I personally think it would be worth it.
Absolutely, absolutely, yes. We need to explain this. Because they won't get their heads around it either, I'm sure, unless we explain it well. They'll be this high off the ground. So, but I guess the other part of it is we can reduce that. Now, I noticed in here we got $44,000 more from MSI. So what's happening with that?
In all the options, I put it in, so the revised options 1, 2, and 3, I added it to all of them because you guys,
You
we didn't.
reduce the amount that we need to collect by that amount? It's
Yeah.
already been reduced?
Yes.
Shit. Damn. Yeah. Oh, sorry, yeah.
This side is definitely going, why?
Well, that could have alleviated that under levy part so they wouldn't have had to feel it as bad, right? But it's already been taken off.
Do you understand that calculation though? Because that's off the 210, right? And
Yeah.
then the 160? Oh, no, the 160 is a,
the municipal portion
Right.
of it. So the town, I mean, ideally, the town should have collected that and put that 160 into reserves,
Correct.
but we're writing it off. Yeah.
Which is why I don't want you guys to compound the problem for this year or future years.
So really, our choice is to say, if we want to reduce the taxes, then we reduce the 2.9 million that we need to collect. Right? We collect less money, that's gonna drive down how much money they have to pay. Or we just make the correction now and apologize profusely and explain it to the people.
On the province's behalf.
On the province's behalf, and we'll make it very clear where the problem was. Yeah. And so these three options, like option one was doing what? Just so I'm,
At the very top of the page, I wrote down what had been asked for at the last meeting. Option one was to keep the exact same dollar amount that should have been collected.
So that's this amount, just staying the same,
2.8, but yeah,
2.8.
2.8 something, so it's, yeah. So that's keeping the same dollars the same exactly as last year.
That's the,
Yeah. Option two was the same mill rate as last year, but that means that because the assessment is down by that 12 million, you're basically making the same mistake as last year. So I showed it as you guys requested, but it certainly, as far as I'm concerned, should not be an option. Option three was showing that the mill rate for residential can go up, and it's offset by the non-residential going down. And like if you bring up the mill rate for residential by 1%, doesn't mean that it's going to go down 1% for the non-residential, because the dollar amounts for their assessments are different, but it'll go accordingly.
so everybody on council agrees that we're gonna stick with this 2.8 million, it's just how do we collect it?
Well, that's the budget we already passed.
Well, it's an interim budget.
it's
Actually, the
final.
budget you guys passed was 2.9 was the budget you guys passed was 2.9.
That's what I had.
Yes, and that's the last two pages, the revised with the 160 waived.
Just kind of curious, I'm looking at the bottom of the consolidated, at each of the options. You have consolidated residential tax rate
Yes,
and consolidated non-residential tax rate.
yes.
What were the actual consolidated residential ones for, okay, for last year, for both? Because you got it here, for example, option three has it as, consolidated residential, tax rate after 2015, under levy is 12.3313.
Okay, I have last year's bylaw right here.
Last year's was, residential was 12.3410.
12.3410.
Yeah. And non-residential was 17.5415.
3 point difference.
But it shouldn't have been the 17, it should have been 19.
Yeah.
So there's the big one.
But again, the mill rate is, if that's what people are looking at, they'll say it goes higher, but if they look at the dollar amounts, they're not changing. So using the mill rate as a comparative is kind of, it's very inaccurate.
except for municipal affairs, lists all the mill rates and puts the names of the towns beside them, and then people use that as a gauge as to what the taxes are in those communities, right?
Correct, and it's something that a lot of CAOs and treasurers have argued with municipal affairs for years because it gives the wrong picture totally, because it depends on assessment so much.
That's where they'll right there apologize to the town of Hackberry for missing the assessment of the year taxation.
Get this nice little thing.
When you
So
look at-
all of those options, they don't talk about reducing that amount of taxation. They're keeping the taxation the same. It's just how we're collecting it.
Option
But-
two,
And do we have the option of reducing that
option
at this
two
point?
is reducing, but that's not what Terry is recommending.
No, but that's reducing the mill rate.
To keep it the same as last year, which is reducing the amount you collect.
Oh, okay. Yeah.
Because you're 12 million short in assessments with using the same mill rate, so of course you're gonna be 12 million of money times the mill rate short.
Yeah, so we'd be collecting 2.7 and we'd have to operate on that much less money
With
in the year.
210,000 or something like that, wasn't it, Terry?
220.
Yeah. Right.
220, okay.
Which basically wipes out anything that you were putting towards most reserves.
And if something happens during the year, then those reserves right now can cover those emergencies or whatever else, but if you take them out of the budget, then what's gonna happen if you have an emergency? You've got no cushion at all.
But option 2 still isn't,
Yes.
so all of them are increases. To what, even though I know you keep on saying it's what we should have been charging, but to the taxpayer, no matter what option we choose, it's a non-residential increase,
Yes.
right?
Well, yeah. I don't like using the mill rate. I would rather, to me, I think that if we ask for less money, it's gonna bring their tax rate down, right? But I understand the mill rate idea. You drop the mill rate and it's gonna bring that amount down at the end, but.
Yeah, that's why I did the 4 scenarios, to give you guys a nice comparative of the different, and for the small commercial, for the residentials, the 2 residentials, it hardly makes any difference at all to the residentials. And I put my little notes at the bottom, as you can see, the one even goes down, so.
So, Brian, which option is administration recommended?
1 or 3.
And why?
Like we discussed, both of us agree that we can manage the 90,000 short and we can work around it. And you still have that little bit of a cushion in case something happens. It'll still have to be recouped in future years, but we can manage with that 90,000. And who knows, if we do have a surplus, then it, it won't even be an issue, which is great. Option 2 is scary for me. It really is, because it's just too big of a drop in so many ways. And of course, you do have the option of the same one I gave you last time, less the 160,000. That one, we will not be short the 90,000. We will have the same budget, but the mill rate, the dollar amount will be higher, but not by much if you look at the comparatives.
Councillor Gilroy?
Just to let you know, our church does pay taxes for my house. Okay, so I'm in the same boat as everybody else here, okay? So I'm not, I wanted to make that clear because some people were joking about how we don't have to pay taxes, but I do. But I was actually gearing more toward option 3, to be honest. I'm thinking that because if you're really looking at, I don't want to say PR, but something of encouragement, if you told the people that not only had an error that had occurred by the government, we ourselves are eating that money, but as well, in order to try and keep rates down, we're also going to take a cut in our reserves of almost $100,000. That, I think, people might be closer to be able to stomach, because it says that if you put both together, theoretically, we're taking a hit of, what, $250,000. And that, to a person who's paying a lot of tax, saying, I don't see the county taking that. I don't see other places taking that sort of a hit. And we are willing to take the risk and take that hit. And so I think that's more of a better PR tool, if you want to use it that way, to say we are willing to do that in order to be fair to you, because we can't recoup. In fact, if you even put in a letter the fact of the other money we lost, that's a lot of money that we are not downloading on people. And I think that's a very positive note if we spin it the right way.
I agree, sharing it is a good concept, but just so you know, the county is down $50 million on their assessment. They're dealing with it and without putting it all back to the taxpayers as well. Everybody's got to. So it's not just us that are in this situation.
Right. But it's the impression. It's important.
So with option number either 1 or 3, I'm looking long term. So next year, when we do this, because we've kept it, the mill rate and everything low with minimal increase, in order to recoup what we haven't been collecting, will our rate have to be increased substantially to cover any shortfalls?
That has it's hard to answer that question because it depends in part on the assessment. It depends in part on how long you want to recoup that amount, if you want to do it over a few years, or if you want to do it just in 1 year. So there's a lot of factors there that we do not know yet, so it's hard to say. It's almost impossible to answer that question, unfortunately, sorry. But option 3, the one that we gave you a scenario of, is keeping the mill rate exactly the same for residential. If you guys do increase it slightly, it'll still be less than what they were paying before, not last year, but the year before that. And you could increase it more and bring the non-residential down even further. That one can be played with as much as you guys like. We just picked a number to start you off.
How do we determine and I probably know the answer, but I can't remember, the difference between the rates for residential and non-residential? Like, how is that mill rate determined, the percentage?
I have no idea if your history goes back 10 years or 30 years. Councils set a rate, and whatever they decide, then from future years, they just move it up or down accordingly. I don't think there is a formula.
Because it's got to, I mean, we got to collect 2.9 million. We know we're going to collect so much from the residents and so much from business, but I'm not sure how we determine that we want
Not
one
quite.
third to come from business and
Yeah.
the other 2/3
We have no choice in the proportion according to what they give us from the education. They tell us this is how much you need to collect from non-residential, this is how much you need to collect from residential.
Right.
That's set in stone. Okay, when it comes to the recplex, when it comes to the seniors, and when it comes to municipal, it's up to you guys. You guys can change the proportion as much as you want.
Can we do that with seniors?
Well,
I don't
seniors,
think
it's
so.
cut across the board.
Yeah.
Yeah, it's straight across the board. So that one, I should rephrase that.
Yeah.
That one, we're not told how much to get from each department. It's across the board, the same for everybody.
Okay.
Okay. But the municipal portion is totally up to you guys as to whether you guys want to go. You know, you guys could go 10 and 11. You could go 5 and 25. I don't know if any formula that's ever been used. It's always been up to council. They usually try to keep it similar to other communities. Or, like I said, they picked a number 30 years ago, and then they've just been playing with it, keeping it near that number over the years. There's nothing anywhere that I know of whatsoever. It's totally up to council every time.
I get thinking about that, and in looking at option 3, which I think is I like the idea of trying to spread it a little bit, at least for a year. But I'd like to know what our mill rate, how we're doing mill rate wise when we compare residential to other towns residential, and how we're comparable to other ones. And I know we took a good look at the non-commercial ones, and we were, or I should say, at the commercial rate, and we were at the higher end, but not the highest. And when we looked at the residential ones, we were the highest for communities of our size. We are the highest percentage taxed people there. And I know mill rate isn't a great way to use it, but our taxes generally for a same property in any other community of our size are much higher than anybody, the highest of anybody. That mill
See,
rate is high.
something else that people don't always take into consideration with these mill rates, and that's why we, as treasurers and CAOs, hate them. They're just a percentage of the pie. It depends also on your assessment. If your town has 50% commercial, industrial, and 50% residential, your amounts, your mill rates are going to be almost the same if you want, right? Some towns, like when I worked at the summer village, 4 of our summer villages didn't even have one commercial building in the whole summer village. It was 100% residential. So again, it depends on the proportion of the town that's residential and the proportion that's non-residential. In your case, you guys have a higher residential population than you do of non-residential for assessment. You throw in 1 or 2 huge developments, let's say, that are, $25, $30 million each, then you can wind up with a pretty well equal amount of assessment. The proportions make a difference to the mill rates too, and that's not taken into consideration in any of the municipal affairs documentation.
But I think what Councillor Panasic is trying to say is we have compared actual this house in this community, this house in this community. We haven't looked just at the mill rate, right? We have looked at how much do you pay taxes to live in Slave Lake, how much do you pay taxes to live in Peace River, Grimshaw. Like we've looked at, it's very difficult, right? Because there's so many variables in that. But we've sort of determined that we are on the high side for taxes.
If you've gone by the dollar amount, you've done a good job compared to mill rates.
Yeah. But our mill rate's also up there. Burn.
Last year's.
Pardon
Last
me?
year's is middle to lower end.
We did. We hit middle to lower. So, I mean, we can probably address it because obviously other municipalities made increases in theirs and changed things, and it moved us, our decrease moved us middle to lower. And I think that we could probably take it without showing residents that we have the highest. We came into council with lots of ratepayers yelling that we had the highest mill rate, the highest taxes in Alberta. We found that it wasn't actually true, but I mean, we were closer to the top. But it would be nice to be somewhere, I mean, even the upper portion of the middle, but kind of stay away from the top.
Because if you compare mill rates, you look at McLennan's 25 on their residential, but their assessment of their properties is way lower than Hyper.
No, exactly, and I think that some of them, I think there was 29 for their non-residential, and like there's a few, like we looked at all of those rates.
Yeah.
But it wouldn't be a bad idea, I don't know if we want to do that, like before we make a decision, is to see what those mill rate, or what.
You can't do it for this year because everybody's starting their mill rate bylaw right about now, and if you wait till everybody's done, you won't get your tax notices out in time.
Well, not necessarily done, even just looking at where we are, because we don't know, is that what you're asking, Brian? Where are we with our mill
You'd only
rate?
be able to compare it to last year's. You can't compare for this year's till probably June or July.
Yeah.
No, as I'm thinking out loud is really what I was doing, and thinking about, that proportion of if our residential is proportionately higher in comparison, versus our non-residential, how expensive were they, or how much higher were they? And I think they were both high, but I think our residential was a little bit higher than the comparable communities in terms of their rates. So if you have to adjust it so that they're both, both are high, but they're both about the same, about the average for residential and non-residential, the non-residential might have to take a little bit more of a hit, which they would be doing in terms of their rates. That's what I was getting at. Trying to make sure that it's not too much on the companies and not too much on the residents, but they're both sharing that burden about equally compared to other communities.
My personal opinion, the reason that I liked option 3, like the 3 of us management discussed, was the fact that this big mistake from the province was not a residential mistake, so they shouldn't be penalized in a way. And the non-residential got away with not paying for it for a year, where they should have, so they got to, earn interest on that money that they didn't have to pay last year. So it should still be them that pays what they should have paid.
Except for I kind of think that we took a look at that total assessment and dropped the mill rate for everybody accordingly, right? It was, I mean, residential taxpayers got a rate reduction based on the government's mistake then. So everybody got the reduction, not just,
No,
well, they did get a reduction,
okay.
but maybe it's not based on the error, because I don't know that we were totally clear on the levy portion of it when we were doing those calculations.
In theory, if we took something like option 3 and we decided to, and we did it by some good fortune, we did have a surplus again next year or at the end of this year. Would we necessarily, since council does have the ability to direct surpluses, would we have the ability to not put back that 95,000, but instead maybe rebate it to our constituents as an act of goodwill that we, so in other words, it's almost like getting their taxes back.
You're talking about a rate stabilization type thing?
I'm just thinking more like I guess profit sharing of 1 year, something like that, where
A
I
rate
know-
stabilization would work in the respect that you'd put that money aside into a reserve called rate stabilization. And then the following year, whatever your budget amount is that you require from the residents, you take that reserve off that total amount and then divvy up the difference between the residents. So it would be, or non-residents for the ratepayers, whatever. But yes, it is possible.
So after soaking this up here for the last hour and a half, we can't get out of it, no matter how we roll the dice.
Correct.
We have to collect it,
Correct.
one way or another. You can only really should collect it once, get it done with, over with. Give them the explanation. The argument is whether we give some, have the residential pay some,
Correct.
or not, or put it solely onto the non-residential. And that's really
Correct.
the argument here.
Yes.
Whether it's we really can't argue over the dollar factor because it's in black and white is what it is. So, me personally, initially I thought, well, we're all in the town, so all the town people in general should pack some weight of that. But then, like you say, it wasn't the residential that was at fault, it's the non-residential. So, and I'm a non-residential, so actually I'll end up paying, so. And a residential, well, and if you look further back, I'm gonna pay a lot more, Ed. So, and that's another argument for another day, but, so, really my feeling is option 3. The way it looks, would be probably the easiest to explain. And my feelings are not to raise the residential and just leave it on non.
And option 3 is sharing it.
Well, no, it's a choice of how, wow.
So it says increasing the residential mill rate.
Right, this is just could be reduced.
Oh, I didn't, well, hold on here. Let me back up.
I think though too to consider.
Well,
in
okay,
this-
yeah, you're right, it was, but the mill rate goes up by 0.3, right?
Yeah.
0.3.
It's not a lot on residential.
No, it's not a lot.
And I prefer not to have to worry about, like, because we've
Yeah.
worked hard to get the residential rates down, and that feels good, and most people are pretty happy
Yeah.
about that. But I see that we're not increasing them back to where they were. right? They're still gonna be lower. And right now, in sort of troubled times, I think that going to the business sector and hitting them again it'll be tougher for them, because you're hearing from a lot of people that things are just a little bit slower, so paying their bills and making ends meet are a little bit more difficult. The only way, and like the residential, a big portion of the residential are people that work for employers like the government, right? RCMP and healthcare and education.
That's right.
Their incomes are consistent, no matter what sort of happening in the time. So it may not be as big of an impact. I mean, there's people that work in the oil sector as well that are in residential homes as well as have businesses, so they'll be hit in both. But I've always sort of struggled with, the government gets to do whatever they want to do. Basically, it's like, nice. We even we get this brand new hospital, fabulous, but they don't pay any taxes on it. We have to actually amortize the sidewalks or the curbs or the roads. So we actually incur costs right off the bat for having the hospital. Our budget is increased by looking after the hospital, which is, I mean, it's fabulous to have it, but where are we getting the money? Where are we getting the money to do this, right? When the province can do what they want. So really, the only way we can kind of get back from those sectors is we tax everybody that works for, to a certain degree, stable environments like the government.
Could we take a 10-minute break and present you an option 4?
We can take a 10-minute break.
Based upon raising the residential slightly to get, it should stay below 13. And it would drop the commercial below 20, which is a much more palatable number than to 19.
Well, I
something.
thought that's what you were saying, it was 19.
No, it's a consolidated, option 3 is 20.1.
Right, okay.
Let's have a break.
Okay, 10 minutes.
And I should be able to give you the option with the difference in the mill rates within that time period, no problem. But it'll be a version of option 3.
And can we take a quick look? Can anybody take a quick look at where we are on the average?
Like I said, you can't get those numbers until everybody
Last year's
passes their.
averages.
2015.
2015 average is fine. It's not going to change
Okay.
that much.
Report sent to us for last year, but we.
Okay, that I wouldn't know where to even look right now, but I'll work on this.